UK Prime Minister Theresa May is facing threats from the Democratic Unionist Party this morning over her current Brexit plans. The party is claiming to take serious actions if they remain unhappy over the state of Britain and its exit from the EU. Back here in the United States, the Commodities Futures Trading Commission is reporting serious concerns for the marketplace as well. They say Europeans are increasingly putting politics over economics. Joining me right now in a Fox Business exclusive is the chairman of the Commodity Futures Trading Commission, Chris Giancarlo. Chairman, good to see you. Thanks very much for joining us.
Oh, thanks, Maria. Thanks. It's good to be with you.
So lay out the Commission's main concerns for the United States as a result of Britain and its plans to leave the EU.
Yeah, thank you. You know, I listened to your interview with Kevin Hassett. It was very interesting. He brought a broader perspective to the sell-off we've seen in the markets. And in fact, maybe even a broader perspective and maybe an international one is the matter of Brexit. It was just early this week that the Bank of England released some numbers that were quite astounding as to the impact, not just on Britain, but on the EU generally, of a hard Brexit. And they were estimating somewhere between $50 and $100 trillion of swaps contracts, basically risk hedging contracts between EU counterparts that are serviced out of London, could be thrown into legal jeopardy. And it was on Tuesday night, just before the market opened on Wednesday, that the IMF released some studies that said that this would have a devastating impact not just on Britain in the EU, but on the global economy generally. And that may have played some role in what we saw in the last 2 days. And very interestingly, the FT this morning is running a story that says maybe the parties have moved closer to a deal, and maybe that's playing some role in what we're seeing. But more broadly, Maria, these markets, which we oversee here in the U.S., many of them are serviced out of London. And so it's an area of great concern for us at the Commission. We're watching this very, very closely.
Right. But, I mean, how would it disrupt markets? I mean, there is obviously uncertainty. First, we thought they were leaving. Then she sort of waffled. We weren't sure what the plan is. Are you seeing dislocation in markets as a result?
We are seeing this. So one of the impacts of a hard Brexit would be not on the final day of that, which is in March, but 90 days before, major clearinghouses in London would need to start offboarding European banks and financial institutions that make up somewhere between 30–40% of the clearing capacity on those clearinghouses. That would cause a fire sale in positions, and the disruption that would cause would start at least 90 days before. In fact, within the next 90 days, we may start seeing that disruption in the markets. And one of the things we fear is that some of the anticipation of that, as people read about that in the press, is already starting to be felt in markets.
And what would you like to see happen? I mean, do you just want a decision either way? Is it the waffling that's the biggest issue?
So we take no part in a debate that's entirely a European one as to Brexit. But there needs to be legal certainty for the $50 to $100 trillion of contracts that are serviced out of London and that are depended on by many European participants. There should be no doubt about this. A hard Brexit will affect EU market participants as hard as it will affect European ones, and globally as well. Is
there anything investors need to do? I mean, should they just get out of the way while all of this is happening?
Well, you know, I wonder whether some of the risk-off situation we've seen the last 2 years was part of that. I don't necessarily think it's boiled down to the retail level, but at the institutional level, there may be some of that may be factored in, and maybe the news today that maybe they're closer to a deal factored back in. But I think we're going to have to watch this very closely over the next few weeks. We certainly will be at the Commission.
Let me ask you about what we saw this week in terms of market disruption. Obviously, a sell-off in stocks, other roller coaster moves in markets that you've seen. You're watching the volatility index closely there, of course. What's your take on what went on? Did we see a shift in allocation? Are we seeing a shift in sentiment?
Yeah. So our core job at the Commission, right, is to make sure our markets function properly. And the good news here, and good news for your listeners, is our markets handled the sell-off, handled the selling demand very, very well. In our futures markets, we saw no trading halts, we saw no stops, we saw no gaps. Liquidity was there adequately to meet the demand. In the equity markets overseen by the SEC, situation pretty much similar, a few halts and a few stocks, but pretty stable. And that's good news. You know, the American markets are still the envy of the world in their ability to handle large demand, handle it well. Our exchange operators, no operational hiccups. It worked quite well, and that's the good news there.
Yes. Go ahead.
No, I would agree with Secretary Mnuchin. You know, markets go up, markets go down. The important thing for listeners that our American markets can handle those highs and those lows.
The fear index, the volatility index, the VIX, it had its largest gain in 7 months this week. So volatility came back certainly this week after being just stagnant for so long. What's the impact there?
Very interesting about that, Maria. In fact, what we saw in the VIX over the last few weeks was the index was actually trading below where the futures were trading, the VIX futures. What that indicated is that investors in that product were anticipating higher volatility. Now that ratio is actually reversed over the last 2 days. The index is up, but the futures are trading slightly below, meaning that at least those investors may be anticipating that we've seen the high of volatility and maybe they're anticipating a reset. But you're absolutely right. The VIX was trading particularly low for the last few months.
Yeah. Meanwhile, then there's Hurricane Michael, obviously devastating impact. Away from the loss of life, 8 people are dead, and the loss of property, obviously the damage is incredible. The hurricane also slammed cotton and peanut crops in the southeast. You already had concerns about cotton stockpiles, right?
You're absolutely right on about that, Maria. So of course, we're very concerned about the loss of life and the loss of property. But beyond that, there's some good news. And the good news, by hitting the panhandle and not Central Florida, the citrus crop seems to be spared damage here. But as the storm crosses the panhandle and goes into Alabama, you know, Alabama produces 30% of the United States cotton output, and most of that cotton is still in the ground. It's not harvest season yet for cotton. So we're seeing some damage. I don't yet have full reports on what that is, but we are concerned about that, and we're worried about how that will play out in the cotton futures market.